Hello there. It's Mitch Goldberg. You're watching Be the Boss of Your Money. This is my live stream podcast. I love doing this. It's Be the Boss of Your Money. We're going to talk about the bull case for stocks. We spend an awful lot of time, well, maybe I do, but we spend a lot of time listening to the bear case. And a lot of electrons and ink are spent talking about the bear case. And right now, election uncertainty. You never know how it's going to end. Yes, we hear Biden's ahead in the national polls, but it's the state polls that really count. If we learn anything from 4 years ago when it was Clinton versus Trump, right? And then we have stimulus. Do we get a stimulus package? Do we not get a stimulus package? Do we need a stimulus package? And then the last one, and I think very important, of course, is a rise in COVID cases. These three, this triumvirate, is what is spelling out the bear market case. But there's also a bull market case, and we mustn't let ourselves get too negative because you're investing for the long term. And if you're always going with the bear market case, you're never going to get off the fence and pick one side or another. You have to eventually, I'm using a lot of sports analogies now, but you have to step up to the plate and take a swing. You have to step up to the tee and take a swing. Okay. Anyway, so you could do all the preparation you want, but if you don't put the ball in the hoop, it's not going to really matter. Okay, so anyway, let's roll the intro, and then we're going to get into the bull market case for stocks. It's very important. You're going to want to hear this because this will basically determine a lot over the near and intermediate term. You need to hear about the bull case, okay? You just need to hear about it, and that's what the story is today. So here we go. Welcome. This is Mitch Goldberg. Thank you. You just saw the quick intro, and now we are going to talk about the bull case for stocks. What is the bull case for stocks? I got another email this morning from a client. What do I think? Am I making any moves during the, before the election, because of the election, because of one way or another, if Biden wins or if Trump wins? This is someone who is obviously not reading my blast emails and watching my live streams and watching my videos, because the answer is consistently no. I'm not making any changes because of the election. We could get a bump. We could see a downswing in the market. We could always have a bear market. But after that, we resume the bull market and we go higher. That's the way stocks have always worked, and I'm betting on that. Stocks have overcome every single uncertainty that has ever been thrown at them. Keep in mind, I lived through the great real estate recession of 1990. I lived through the blow up of long-term capital management hedge fund, the tech wreck, the Great Recession, 9/11. And, these were all really good reasons for the market to stay down, to go down and stay down and never recover. And what has happened every single time? Stock market has recovered. The tough thing is to realize, or the tough thing is to identify which companies are going to become the new leaders and which companies will actually go down and stay down. But that has more to do with individual security selection and whether or not you want to choose individual stocks and bonds, or if you just want to use mutual funds or exchange traded funds that give you a higher level of diversification. Diversification is a strategy that we use to lower risk. This way your total return doesn't become reflective of your worst investment, or a bad investment won't have an outsized negative impact on your overall returns, but it's not a strategy that we use to increase returns or power charge returns. And it will not, diversification will keep your overall portfolio from going down in a generally down market. So I'm just checking the lights are all on. So welcome to Be the Boss of Your Money. This is about making you the boss of your money, not your money becoming the boss of you. It's very easy to happen. We're going to go through a quick review of today's trading action. I missed yesterday. I had some personal things to take care of. It just the live stream just wasn't going to happen yesterday. I apologize, but I've been doing this now about 4 or 5 days a week for almost a year, and it's a lot. I'm very proud of my live stream, and I really want to make sure I'm bringing you lots of value. I see some people out there. Hey, Ray, thank you so much for joining me. By the way, Ray, I spoke with your friend today, Charlie. Thank you so much. I was going to call you on that. Jeff is out there as well. Thank you very much. If you have any questions, that's what the comments are for. Hit me up. I'd love to answer your questions during the live stream. If you're watching this in the replay, I'd like to welcome you as well. If you have any questions and you're watching this in the replay, hit me up in the comments and I will answer those. I will see the alerts whenever the questions come in. So let's do a quick share screen. Got some hot news also to share with you. The hot news is, you'll see in a second, Pelosi and Mnuchin make progress in stimulus talks, but big differences remain. Okay, so stimulus is alive. I'm going to talk about the stimulus and that whole shebang in a few minutes, but let's just take a look. The Dow is up 113 points, S&P up 16, NASDAQ up 37 points, and the Russell 2000 up a little bit. The VIX is up a little bit too. Let's take a look at what this means. I can't stand days. I find it very negative when you have a day like today where the Dow is up over 300 points, and by the end of the day, it was up a measly 113 points. Basically the market finished on a down note, more or less toward the bottom of its trading range for the day. The S&P was up a little bit, NASDAQ, nothing major. Overall, it wasn't a bad day. It's just that I don't like going from a really good day to a bad day. It was a good day because of talks about stimulus and a political agreement. It didn't work out. Things were getting acrimonious, so the market sold off on it. And now maybe futures will rise tonight and we'll get an up market tomorrow because there is progress being made with Mnuchin and Meadows representing the White House's position, Pelosi representing the House of Representatives, Democrats' position. You know all this stuff. The VIX was up a little bit. You want to see the VIX go down, but the VIX, when the VIX goes up, it's a sign of worry. That's the one thing you want to see in the red. It means if it's up, it means that traders, professional investors, they're paying more to hedge their bets. So if you're hedging your bets, it means you're kind of worried. So it's called the fear gauge. When it goes up, there's more fear. When it goes down, there's less fear. I think 29, just about 30 is a big line in the sand. We need to see that stay under 30. We really need to see that get back to under 25 where it was about 6 weeks ago. All right, so let's just take a quick look and see who is out there. Hey, Ruff. I got sued by my money. As the boss of my money, HR said my employee had a few complaints. That's good. That's really funny. That's of course. Thanks for tuning in, buddy. Anthony Ruffalo, who creates great content, by the way, coming in from LinkedIn. And employee claimed I was too demanding. Well, you're the boss of your money. You've got to be demanding. Wow, your money actually complained, huh? So I think money has a way of complaining by disappearing. All right. But yeah, we can't let our money quit on us. That was good. I like that. Thank you very much, buddy. That made my day. Let's go on. Let's take a look at the Fang Stocks. These are the big heavyweights that have lifted the market off the lows from March. This is why the stock market's trading at or near record highs, because of these stocks. Facebook, Apple, Amazon up, Netflix off a little, Google up, Microsoft up. Google, antitrust charges filed against them by the Department of Justice. But a lot of people think that could actually be good for Google stock because the sum of the parts of Google could be worth more than the whole company. It'll have a down day soon, and then everybody will say, oh, it's down because of the Justice Department lawsuit. Okay. Oh, we have one more from Sir Ruff. If money could talk, all it would say is goodbye. Well, buddy, money talks a lot, right? So I guess the key is it's like you have to tune it out and put on your headphones and not listen to it. Yes, if money could talk, we have to make the money work hard. But I want to show you something. Let's see if we could get a extended hours quote here. You're going to see a lot about this. Netflix is down $28, down over 5% after market trading. Their earnings just came out a little while ago. Earnings weren't, subscribers came in lower than expected. So we should expect to see possibly a down NASDAQ tomorrow morning, led by Netflix. All of a sudden, one of the leaders, one of the Fang Stocks is missed numbers. That happens once in a while. Usually what happens is Netflix misses a number. The stock goes down for 2 or 3 days, and then it comes right back up and hits new highs. So give it a day or two and see what happens with the stock. Let's move on. I see some more people out there. I see Jeff is out there. I'll be right with you, buddy. Reopening stocks had a pretty good day, and this is what I'm talking about today, the bull market. American Airlines, United Airlines, Delta, Carnival, Norwegian Royal, Planet Fitness, Cinemark Holdings, Southwest, Marriott International. These are really stocks that really show the bull market case. That's why I chose these as reopening stocks. The industrial stocks, which is what I want to talk about, a cyclical stock trade here. But FedEx continues to power higher. American Airlines, UPS, Johnson Controls, look, Honeywell, Caterpillar continues, 3M, Eaton Corp, even GE is solidly over 7. John Deere. This is the bull market case. Cyclical stocks. Boeing finally getting some clearance. They are clear now they're clear to fly by the European regulators. Okay, they've recertified the MAX jet, so now we could start seeing European carriers actually get their Boeing MAX jets back into service. And then we've got the Sector Etf. This is the most important thing I look at every day. I see some more comments. I'm getting back to you guys right away in a second. This is the most important thing I look at every day. What this is the 11 sector ETFs that represent the 11 sectors of the U.S. economy, but with stocks. Energy led the way, financials up, communications, discretion, and industrials. But this is the big one here, the XLF financials. You need to see financials lead the way. And part of that is because of rising interest rates. We're going to talk about that too. Let me cut the share screen. Keep up the great work. Thank you, buddy. Really appreciate you. All right. Jeff is out there. Mitch, seems to me that stimulus is positive for the people, retail, and the banks, not players in the indexes. Will they still react? There's a lot to unpack with that question because it's a really good question, and I don't think I have a super quick answer. We're going to come back to that. How about that? And a serious question from Ruff. Okay, serious question. If you see a Biden win, you think that's a good opportunity to buy in a dip? And if so, what sector? All right. Well, you know what? I have the answer for you for that one. Okay, so let's get into this. I want to talk about the bull case for the stock market, because the negative case is political uncertainty, which I don't think goes away after the election. And I'm not just talking about if there's a contested election or not. Even when we get to next January, February, it's still going to be very acrimonious. I don't expect any kind of, peace in politics just because the election is past us. We're already looking at the next midterms and then the next election, 2024, right? And then you've got no stimulus and rising COVID cases. So there's a few things to unpack. Let's first talk about stimulus. If we don't get stimulus now, it's a short-term negative for the market. Regardless, investors are expecting stimulus to happen after the election. If Democrats do get catch a blue wave, then you're going to probably see a ton of stimulus. Plus, regardless of who wins the White House, you'll probably see a $2 trillion infrastructure stimulus plan, which will be a big boon for jobs and the economy. So those are very stimulative to the economy, and we should do it now. I've been talking about this for a while. Interest rates were in the 0.6s, now they're in the 0.7s. The time to borrow is when interest rates are really low. I know that is anathema to a lot of people in economics, and a lot of people don't want that. But if you're going to borrow, you should really do it now while there's demand for U.S. Treasuries. You don't wait to borrow when interest rates go high. You borrow when you can. You don't have to spend all the money, although I'm sure the government will spend it all. But better to have the cash in the bank now and get whatever you can than to wait for rates to go higher and pay up for the debt service. Okay. So I expect a bigger stimulus package going forward. So even if Pelosi, Mnuchin, the talks break down, you could see a 5 or 10% downtick in the stock market. I think that would be about it, though, because people are still going to be holding on to the next stimulus and the next infrastructure bill, that whatever comes after that. Now, if Biden wins, if you see a Biden win, is that a good opportunity to buy a dip? Well, we might not get a dip. Who says we get a dip? We could, we might not. Whoever wins, if we get a dip, ultimately the market recovers. But we're talking short term or intermediate term. Yeah, I think you do buy the dip, but it depends on what you buy. I think the concern for index investors, and this kind of gets back to Jeff's question, is does the source of money to buy cyclical stocks in a juiced up economy, does it come out of the Fang stocks, at Fang plus M? Like, do people start selling Microsoft and Amazon and Apple to fund their purchases of industrials, financials, energy stocks, consumer discretionary, and gold? Those are the areas that I expect would do well. And that brings me to the bull market case. The bull market case is really more of a, the bull market case is more of a, let me start that again. Let me see if I could put that to the words, choosing my words carefully. The bull market case is really considered a broadening out of the stock market, winners and losers. Instead of just focusing on the top 6 biggest companies that are traded in the S&P 500, which we talk about every day, the Fang plus M, okay, stocks, the Facebook, Amazon, Apple, Netflix, Google, Microsoft. What we want to see is a broadening out from other sectors helping lift the market, because the leadership is narrow and we want to see it broaden out. And I think that's the bull case, is that I don't like to necessarily say value stocks. I like to say cyclical stocks, which typically see their earnings rise from an improving economy, have already been working out pretty well. They've already been working lately, but they could continue to work out. It's just that, does the money that investors come up with to buy these stocks, is it cash on the sideline that they're putting into the market, or do they sell their big winners to fund the new purchases? If that's the case, then we'll probably have a somewhat flattish market, because you're knocking down some stocks to put the money into other stocks, and that would be a flattish, market, not necessarily bearish, but I do think that is more in the bull case, because there is an opportunity. So far, the big stocks that we've just identified are holding in very well, and it does not appear in any way, shape, or form that those stocks are being sold as a source of cash to fund new cyclical investments. So what typically would do well in a cyclical bull market, where there's a lot of stimulus, the government spending like crazy, and interest rates start to go up a little bit? What would do well are industrials, energy, financials, consumer discretionary. Consumer discretionary means companies that are focusing on the consumer. So you think about like a Starbucks, or maybe a Harley Davidson, or something like that. Those are consumer discretionary companies. The industrials, you think of like UPS, FedEx, Honeywell. You think of financials, you continue to look at, like the big banks, for example, JP Morgan, Citigroup, Bank of America, energy. You saw ConocoPhillips just bought an oil company called Concho. So you're starting to see some real consolidation. I think we're going to see a lot of consolidation in the oil sector, which is actually very bullish for oil stocks. And look, we're not giving up. We're not going to stop using oil anytime soon. And if the U.S. has a cyclical uptick in economic growth and GDP, I'm not talking a rebound from the third quarter. All right, then what we could see is a pretty good rise in energy stocks as well. And since they're already oversold, energy and financials could actually give you your biggest bang for the buck as part of the bull case, as part of a broadening out of the stock market and as part of stimulus. Okay. Whether if we get the stimulus now or not, if we don't get a stimulus now, like I said, I think we see a 5 or 10% correction in the stock market. And that's probably even overdoing it. Because we're just getting ready for the next stimulus anyway. We know it's going to come. If you don't believe stimulus is ever coming, then you have to suspend your belief that Congress is great at spending money, even if they have to borrow it, which is what they would do. But if interest rates are still at 0.7% on the 10-year Treasury, and you could borrow it and you need it now, you do it now. That's the time to do it, right? I've always learned this in business. The best time to raise money is when you could do it. When you don't, well, I think we need it, but when there's demand for your debt. Okay, let's do that. So that is what I think works. So it's all led by cyclical. I've got all my my notes on this over here. So stimulus or not, there is a very good bull case, but I think the bull case lies in, again, those sectors. So let's take a look out there. By the way, Jeff, just to put your question up here, seems to me the stimulus is positive for the people. Yeah, stimulus is positive for people, for consumers, for it's good for the retailers. Listen, the CEO of Walmart has been very vocal and said, "Hey, after the CARES Act started to wear off, we saw it in our store where people all of a sudden, the spending went down." If stimulus affects the lowest income earners immediately, if they spend the money immediately and they stop spending, obviously, as soon as they run out of it, and they run out of it pretty quickly. So I think it's good for stocks as for the short term as well. But if you also think about all the stimulus that the Federal Reserve has pumped in to the economy, and you think about how low interest rates have been for so long, and I want to say two words: operating leverage. If you think about all of the cost cuts that corporate America and really the entire corporate global has done over the last 7-8 months, a little uptick in the economy would have a very magnified impact on corporate earnings. So at least I could tell you this: corporate America has tremendous operating leverage. So just a little bit of extra business has a very big impact on the bottom line. And that really impacts cyclical companies like industrials, consumer discretionary, financials, energy. And that's why you're starting to see these stocks get a little bit of an uptick because it's expected that if the economy picks up a little bit more and we get stimulus, that's the base case right now, those stocks will feel it very quickly in a very positive way as far as their earnings go. It's just a very bullish scenario for them. All right. Hopefully that answered everyone's question out there, Ruff. And Ryan Stark, great insight. I learned something every time I do. Dude, thank you so much. Ryan Stark is well, you're really a marketing expert to help people like me, right? So if you're a financial advisor and you're watching me right now or in replay, don't forget to ask me a question. Words of encouragement are always appreciated. And connect with my friend Ryan Stark, because he is a marketing genius. He's also a financial advisor, and he knows how to really build a business on social media. So connect with him. All right, guys. So that's about it. That's where we stand today. I thank you all my friends out there. Thank you so much for watching. I really appreciate it. And I hope this helps everybody out. And See you tomorrow. Thank you.